so patiently for this market to move one way or another, painfully so, over 4 trading days after that gap up. And I pointed out multiple times in different indices, there's either 2 or 3 in the S&Ps, 4 open gaps below. And while it seemed logical that at least the first gap would get filled, we're into this end of year bullish holiday period. And with the Thanksgiving Day holiday, things typically don't go down at that period during the year. And I've got the hourly chart of the S&P 100 here as it was going sideways, informing that bottoming pattern there. And finally, today, it broke out and the buying just continued throughout the trading day. So we've got many breakouts. And one of the things I mentioned in the green room today was that, look, we've got this clear, defined breakout. And while we don't know what's going to happen next, the charts now suggest that they're going higher. Of course, we always say higher to where. And if I scroll this back, it looks like it's going to go up here to the high of the year, potentially. Maybe can clear it marginally. But what we do know with a pattern like this, and it's black and white, it should not go back below today's low since prices have broken out. And while things might pull back a little bit, we always say it shouldn't go down more than or close more than 50% into, I can't get that to say, 50% into that wide range bars range. And you can see this little support area on the hourly chart, also what we call minor support. So any pullback tomorrow ideally stays in the upper quarter or third of this wide range bar, rattles around. Maybe it just shoots higher. Who knows? Since we're into this bullish period and the market's going to be closed on Thursday, and buyers may just throw it all into that and then take the rest of the week off after Wednesday afternoon. So in this layout that I've got here, it's what I call looking for the top-down approach, the broader markets. What are they doing? Then the S&P sectors, and then there are other sectors within that, and then all breakdowns of subsectors. So starting at the top, and we see breakouts in the NASDAQ 100, of course, in the S&P 500, the Dow broke out, and they gave back a little bit at the end of the day. IWM didn't participate very much, but maybe it's going to do a catch-up tomorrow above these highs. And the transports didn't do much, but they look like they have the potential to move higher if it clears today's high. A little catch-up, well, they all can participate into the holiday. Now, as we look at the S&P sectors, the top sector was technology, and that broke out, and primarily, semiconductors. So what was extended, or what appears to be extended, can become more extended. One red bar is no reason to short, and some of the reason we could assume why the markets have been going up is that some believe that the market is up too high. Maybe it is. It's a little extended there. You can see from the 20 MA, and they start shorting, and of course they have to cover as it breaks out above the highs. They don't want to get run over. So this looks like it certainly can go higher. And if we look at a weekly chart, well, that's new all-time highs. What's going to stop it? Maybe the next round number at 170. Communications, that broke out. That new all-time highs. Well, not all-time highs, 52-week highs. There's a pivot up here. Real estate, as long as interest rates continue to move lower, and they did today, and they have room to get to support. I covered that pre-market today. That supports a bias that the markets can go higher. Once this turns up at this support level, the markets will begin to have some difficulty there. And there's a lot of sectors that are lagging, especially healthcare, but financials moved up, and they're extended. So we don't want to see prices break below today's low, and ideally they continue to go higher into the holiday, and so on. So as we look at that, of course, looking at stocks that are doing well, one of them that did great today that we took advantage of early on in the day was ARM, and it's a semiconductor. It was a new issue earlier in the year, and I've been keeping an eye on it. How do you find something like this? Well, you throw it in a thumbnail, which is a small chart, and you just keep an eye on it, or you set alerts. And my alert went off early this morning, and it was one that cleared these highs and continued to move up throughout the trading day. It broke out and it just held on to the gain. And it looks like it should be able to tag $60 tomorrow. And it's probably going to stall there. Maybe it gets into that gap, which is just above $60, where it'll continue to go higher. Um, so there were many things today, but that we took advantage of that moved up. But there are those that look like they can play catch up. That's been going up for a while. PayPal. That looks like maybe it could be a little catch up. It's been a dog for a good part of the year. But these little hook patterns, this looks like something that could be able to advance now that it's make a turn. So there's a lot of these, what we call catch up type patterns that have been laggards that can move up where some buying comes into what's been beaten down. Uh, as we scan through different things that have done well, looking for wide range bars, bottoming tail bars, and you see a lot of wide range bars in the NASDAQ 100. Allergen was one that was played today in the room. So this is one that we're looking at for tomorrow above the high to move up. A lot of the semiconductors, SAX, a railroad. So that supports that transportation index moving up. So tomorrow we'll focus on IWM, see if it can play some catch up. The 200 MA is there, but if this begins to take off, not only should it be a good day trading opportunity, and of course the Russell futures, the stocks that are in there, and we'll go through them and look for continuation breakouts and continuations of wide range bars. So join us in the room tomorrow if you can. We'll certainly be on the social media sites at 9 o'clock reviewing open trades and what the market is doing. And if you have any questions, email me, Greg at Master Trader.